This is the first video in the series about long-term investing. In this video, we'll not talk about analyzing businesses or how to look at financial data, but we'll talk about some general guidelines that will help you in your investment journey. These guidelines will be very important in developing a mindset of a long-term investor. So without further ado, let's start with the video. So the first guideline, and I think this is by far the most important guideline, that you should only invest money that you would not need in the near future. I'll explain this with an example. Say you have a salary of 50,000 rupees and your expenses are 20,000. Say you have 30,000 rupees every month that you can invest in the stock market. But should you invest the entire amount? The answer is no. And the reason is that you should allocate some amount to emergencies. So let's say if your expenses are 20,000, then you should allocate say 5,000, 10,000 rupees to your emergencies, right? Because let's say if you invest the entire amount in the stock market and in any way you need money, then you need to sell your stocks, and it's possible that the stocks are not doing well at that period of time, or maybe the market is not doing well, or maybe the stock price is doing very well and you would have to sell and lose out on profits, right? So you should always allocate some money to your emergencies, right? The second thing is you need to develop discipline. By discipline, what I mean is that let's say if you started investing with 20,000 rupees, then you should keep investing in the stock market. And let's say there'll be a period of time where maybe the stock market doesn't do well. For example, look at the graph of Nifty 50. This is the index. This is the graph of the index, that is the weighted average of the top 50 companies of the listed on the National Stock Exchange. So if you look at this graph between 2000 say 21 to 2000 March of 2023, the stock market didn't really move much, right? So if you started investing in say 2021 and you kept investing till 2023, you might feel that that the stock market isn't really moving, I'm not really making any money off my investment, I should just stop investing, right? And that might be an okay thing to think at that point of time, but if you look at how the stock market behaves, you'll understand that this will never work for you. Because say for example, if you would have stayed invested in May 2023, then from May 2023 to April 2024, the stock market has given amazing returns. So you should stay invested and not try to time the market. The second thing is that if your salary increases, let's say if you make 50,000 per month today, and next year you get an increment, or you change your job, you start making more money, then you should allocate some part of that increase in your salary to investments, so that as your salary increases, your portfolio also keeps growing with you, right? The third thing would be to have conviction in your decisions. Say for example, you analyzed a company, and you think that the company has good growth prospects, the company is doing well, the profit growth is good, but the stock price isn't really moving, or maybe it has fallen. Let's say consider the case of ITC. This is a company that makes cigarettes, a lot of FMCG products like cookies, chips, and they're also in the hotel business, so they do a lot of things, and the company overall is doing well, right? And you believe that there'll be the hotel industry will grow, or maybe they'll be able to sell more of their FMCG products like biscuits and chips, or maybe they're launching new products and they're being well received, and you decide to invest in this company. You look at everything, you analyze it well, and let's say you invested at the levels of say probably you invested here, right? Maybe you invested at the in 2021, and you invested at the levels of 200, and time passes by, and now it's been around a year, right? And the stock price hasn't really moved, and but the fundamentals haven't really changed. The company is still doing well, the company is still able to increase its profit, but the stock price isn't moving. So then somebody might think that I should sell this investment and invest in some other company, and that will be and if you think like this, then you will never make money in the stock market. Because sometimes the stock price doesn't move even if the company is doing well, but if you give it enough time, then the stock price will definitely increase if the company is doing well. For example, look at ITC. It didn't really move for even maybe more than a year, from 2020 to say 2022, the stock price didn't really, or maybe 2020 to 2022, the stock price didn't really move a lot, right? But since then, the stock price has been doing very well. If you look at say 2022, the stock price has been increasing, and right now it's trading at 428, at the levels of 428, and it even touched 490 or almost 500 rupees. So if you would have invested at the level of 200, and so you would have doubled on your investment, right, if you would have stayed invested. But if you would have sold in this period, then you would not have made any money. So it's important to keep conviction in your decision. If the company's fundamentals have not changed, the company is doing well, have patience, the stock price will move and will give you good return. And the fourth point is that you should avoid risky bets. So never, always when you decide to invest in a company, base your decisions on the fundamentals of the company, on things that you can read, that you can check. Maybe you can look at the financial data, and we'll talk about how to analyze companies in future videos. But if you know how to analyze a company, and if you've analyzed it well, then base your decisions based on that. Never base your decisions on speculative news. For example, look at a stock, Vodafone Idea, right? It's a company which has a lot of debt, and and the company is losing market share. The company has not been doing well for a while, but still the stock price has been increasing. Okay, it was trading at, and of course it fell also from a high value, I guess. Maybe at one point it was trading at levels of 100, but maybe for you maybe there's a, and the company wasn't really doing well, right? But let's say if you look at the 3 year, or maybe if you look at the 1 year graph, the company was trading at 7-8 rupees, and there's a lot of news that started coming in that some certain individual will maybe buy the company, or maybe invest a lot of money in this company. And based on that, people started buying this company stock, and maybe it doubled also. But if you base your decisions on these kind of news, then you will most probably not make money from your investment. Recently there was a merger news that Sony was going to acquire Z or something like that, and that deal never really happened. And the stock price moved up. The stock price did very well for Z, but then news came that okay, this merger is not going to happen for whatever reason, and then the stock price started falling. So then you would not make money if you base your investment decisions on these kind of speculative news, because you don't know if that will happen or not. But if you base your decisions on growth prospects, on the fundamentals of the company, these are things which will not change, right? I mean, which can change, but most likely, if the company has been doing well for the last 5-7 years, and if nothing really drastic happens, then the company will keep doing well. And if you think that the sector is also going to grow, and everything about that company is good, the company will keep doing well, right? And if you keep tracking these financials and base your decisions on that, then you will make good money from your investments. Okay, this is all I had. I hope you learned something from this video. In the future videos, we'll talk about individual sectors, how to analyze, say, the banking or the finance sector, or how to analyze FMCG companies, and we'll go in depth and look at key financial metrics for each sectors that you would need to look at to analyze companies from that sector. Okay, thank you.